billion crypto rug for one of the top projects in the real world asset space, going to pretty much zero in hours. We've just now got the CEO responding in a live interview. Let's listen in on this, but this is not a pretty sight, guys. I mean, let me just quickly share how painful this chart has been. I mean, this is the rug pull you're looking at, and this is not a meme coin, guys. This is not a meme coin, tanking down here on Mantra. Let's listen in to the CEO, and then we'll respond to what we hear from him.
Be very transparent about their holdings and share these addresses online, because I think the more transparent and honest people are, the better it is. And I think that it would definitely bring a lot of clarity and a lot of calm to the market if people with very large holdings were open and honest about it. I mean, obviously it's a risky thing to do, but the industry could do with a lot more of that. So that would be my challenge to you as a journalist, is to say, hey guys, I'm the CEO and co-founder. This is how many tokens I have. This is when I've sold. You look at someone like Vitalik. Every time he moves tokens now, everyone knows about it. You're under scrutiny, and people want to know why. So that was my first question to you, if you're willing to do that, and if the rest of the team would do that.
Of course. Yeah, I mean, my wallet on Mantra is a public wallet, and people know it already and have known it. So I actually even had someone ask me a few days ago, like, why did I unstake from the association validator? And it was because I moved it onto the liquid staking protocol Fluxtra, and I did that literally like yesterday. So you can see that all of the tokens that I own are all staked, right? And I did that last night, like before all this happened. So more than happy to share those addresses for myself. Obviously, on the transparency report, we have published all the team and community the team, the company, and
just for those joining who don't know what's going on, this is on Mantra you're looking at. This is a top 20 crypto project with partnerships with one of the biggest real estate companies in the world, Demac, signing $1 billion deal to tokenize real estate. This was a serious project. It's a utility token. It's not a meme token. And you wake up now with this dumping from above $6 to now 68 cents, $6 billion wiped out. And you're listening in to the CEO right now.
And to you, obviously, we spoke a bit off air, and I think you've been pretty honest, other than not pointing a finger at a specific exchange for not playing ball. Yeah. When are you going to know more, and when is the public going to find out sort of more details about what has happened there?
Yeah, that's a tough question. I mean, honestly, I don't know, just because there are legal ramifications and regulatory ramifications here. We will be as forthcoming as possible, but I can't answer that question with any timeline or specific timeline, because I just don't know the answer. So yeah, I mean, we'll do what we can, but right now I'm just not able to answer that question.
From sort of a listing perspective and partnership perspective, do you think some rules were broken by the exchange in question, and the way that they were managing your tokens? I mean, do you have a legal leg to stand on here, and would you chase it up through courts if it's possible?
I mean, we are actively looking at the legal ramifications of this. Obviously, these were not our tokens. All of the team tokens are in verified wallets that are locked and vested, and have not been put on exchanges in this particular situation, obviously. So we will have to see what our investors want to do with this, but we are in contact and exploring all options, including legal ones.
I guess my last question is, obviously a lot of investors and token holders will be really upset about just the complete crash in price, and not everything is about price. What is a fair value of an OHM token? I mean, have you ever considered that? And what is the real road ahead here? People, I'm sure, want some assurances that this protocol is going to keep going, and you are going to tokenize real world assets and stocks and bonds. Sure. and real estate. What's the road forward?
Yeah, I mean, obviously this is an unprecedented scenario for us. It's a tough situation, but we are foundationally strong. The business is solvent. We've had significant institutional interest of continue to support the business. I think right now our plan of action is, come up with this burn and buyback mechanism that we want to, communicate with our community to make sure that we support them first. That's the most important thing right now. We're in constant communication with our exchange partners to make sure that we can continue to provide liquidity with our market makers, so we can continue to provide liquid markets on the OHM token. And we're constantly giving them updates about, what's ongoing and what we're doing about the situation. Obviously, a big part of that is, talking to people like you guys and getting our side of the story out. We want to make sure that they understand that we're here. It's a tough scenario, but we'll come through. We're grateful for the support of our investors, for the community, for everyone who's reached out. But it's just another bump in the road of our multi-year journey, and we'll do what we can to continue to build on from this. And that includes, working with our institutional partners. That includes, building out the ecosystem and continue to develop things like the ecosystem fund and this RWA accelerator we have with Google, et cetera, right? So it's a tough scenario. I'm not going to lie. It's been a long day, but it's just beginning, and we'll continue to communicate as directly and publicly and transparently as possible. So, again, I appreciate you guys having me on to share a little bit of our side of the story, and not shying away from asking tough questions, because these are questions the community deserves answers to, and we're more than happy to answer them as best as humanly possible and as transparently as possible to everyone. So we are committed to that.
John, thank you very much for your time. I know you've got back-to-back media appearances now for the rest of the day. We appreciate you answering our questions. And once again, I hope the team can be as transparent as possible about token holdings, who moved what where, and who stood to gain from that. And yeah, we do wish you luck going forward. We will be asking hard questions. We will be doing our blockchain analytics and our research as well. But we appreciate that you took the time. I know it's been a long day, and we wish you luck going forward, and hope to see you soon. I guess Token 2049 in Dubai. Hopefully in a month's time we can take a look back at the situation, and it might be different, or we'll at least have a lot more clarity about what happened. So thank you so much. If you've just joined us, welcome to the Chain Reaction. We've just chatted at length with Mantra CEO and co-founder John Patrick Mullen about the crash over the weekend. If you're joining us here for the first time, we are live every day on X, so please do go ahead, retweet this video. We'd like to get...
Not a convincing interview there from John Patrick Mullen, CEO at Mantra. I mean, first of all, let's just go back a step. If we jump onto my profile on Twitter. And by the way, if you've not watched my short video on YouTube, make sure you jump over to YouTube to watch this video here on the collapse and breaking down the detail of what's going on. I think it's really useful. But I want to come back to this point here, which is I tweeted at Patrick Mullen earlier. I said, dealing with his crisis moment in the worst way possible thus far, not enough comms. And I referred back to Bybit, right? Bybit dealt with a $1.5 billion hack just over a month or so ago, and he did so with full transparency, right? He kept his comms running, answered all the questions, showed his face at the time that it mattered. What I'm seeing here from the CEO of Mantra, and again, maybe this is just an experience, maybe he's not as an experienced CEO, operating CEO as somebody like Ben at Bybit, is a real difficulty in dealing with getting in front of the messaging. I mean, that's been a huge failing here. I mean, he should, like I just said there, he should spin up a live stream, a space, and speak to the community directly. He's opted instead to go on to speak to, Nick Guzman at Coinage Media. Here, he's speaking to Cointelegraph. He's doing select media appearances with journalists, which is not the modern way of getting in front of a situation like this with your community. Speak directly to your community, not in a pre-prepared interview with questions which you're just going to answer politically and sidestep, but actually come out, be forward with the data you're offering. Offer more data than people are asking for, and show your hands to say, look, this is not me. And I think that interview was just disappointing. It doesn't provide any clarity, doesn't provide any guidance, doesn't point the finger. I mean, let's face it, you're a CEO of a project who's claiming you didn't dump and none of your insiders dumped and it's all locked and in the wallets. Tell us who you think it is, right? You can't just hide behind, I think it's legal ramifications. No. If you think it's Binance rugged you, say so, right? Say that Binance rugged us. Say that Binance forced our liquidations. Tell us what happened. Tell us which wallets were affected. You know this stuff. You can see it. This is your business. You should be telling us this stuff. But a difficult day for the crypto space, right? A damning day. I mean, the rest of the market we'll come on to shortly is actually green, and we'll look into the pre-market. We'll cover the market open like we normally do here on these live streams. But let's kick off with which is just, a painful period here for crypto. That a top 20 $6 billion project, a utility project, right? A real world assets tokenized project with partnerships with companies like DeMax signing $1 billion deal. There's not somebody aping into a meme coin or going on Pump Fun or Radium to play around with a meme coin who expects to see a 90% candle. This is people investing their hard-earned money in a project they expect to go and deliver on groundbreaking technology. Let's face it. And they wake up to a candlestick like this, hugely damning for the crypto space, a painful moment, and it doesn't look good. Now, where do we go from here? Well, there's three key parties, right? In this situation, there's three key parties in terms of who did this. Was it the insiders who sold their tokens? Because we know the tokenomics were quite skewed to the top holders on token. Did they sell? Did they rug pull the project? So far, we're hearing no, that all their tokens sit in the wallets. Okay, morning, PT in the chat. And then the next question is, was it the advisors, right? We saw that some people said Laser Digital were moving some of their tokens onto an exchange. Laser Digital since came out on a tweet, which I shared in my video earlier, and said, it wasn't us. That's not even our wallet. Okay, so the advisors are saying no. Then you had Binance respond and said, yes, we changed some of the metrics in terms of our risk management. They tweeted. So you got all three of these kind of possible people that could have caused this, all denying it at the moment. Nobody's saying this is what's caused it. Nobody's saying, no one's putting their hands up and saying what's going on. So difficult time for the project. Can the project recover? Can the project recover? I mean, we've seen Solana recover. We've seen Polygon recover from a tough time when it was known as Matic, right? We've seen projects recover from difficult periods, but we've also seen projects not recover, right? You've seen the likes of Terra Luna. And in these difficult times, you have to remember that the market is very challenging. You're going to have a lot of people now shorting. You're going to have a lot of people trying to long from the bottom, trying to get, some of the gain to the upside. It's a different dynamic now. This market becomes a different game where people who don't really care about the project, like if they're not a holder, they're just looking to be like scavengers, like vultures trying to grab a quick buck here. So it's very hard to see an immediate recovery here. I mean, Patrick Mullin there spoke about a burn and a repurchase. Let's see how that plays out. Pity says, what's frustrating to me is this is the story that will be on the mainstream media for the crypto space. Exactly. And I said at the end of my video on YouTube, which I just shared, that it's a bad day because of that, because of the headlines, because of the red mark it puts next to crypto's name at a time when we're actually making tremendous progress. You've got a pro-crypto president in Trump. You're getting a new SEC chair. You're getting lots of bills being passed for crypto. You've got the spot ETFs. You've got all sorts going on. Institutions want to adopt. And then you see a big token like this happen. And you're like, wow, institutions were holding this token. Right? Many institutions you can imagine who wanted some exposure to real world assets, which is a big space. BlackRock has spoken about it. McKinsey has spoken how this is a multi-trillion-dollar space. Many people would have looked at the top real world asset plays like Ondo, and On would have fallen into that category of people evaluating RWA plays. I know we made a video on that, analyzing the whole tokenization space, and I highlighted Om as one of those projects as well because of the partnerships that they had offered like this. And they could have easily got wrecked in this at no fault of their own. I mean, if somebody buys a Doge or a Shiba, I'm going to look at them and say, yeah, but you bought that crazy crypto. It's your fault. But this is a project. This is a utility project. This is a project that's, actually got a CEO and project and founders and their docs. I mean, to get rug pulled by them, we got to hope for the best. Hopefully it wasn't a rug pull. Hopefully there's a better explanation out there. Maybe it was the exchange taking advantage, in which case that could be even worse. That opens up another can of worms. Did a Binance, did a OKX, which exchange, did they purposely force the liquidations to go and kill a project? Wow, what a president that would be if an exchange killed a $6 billion project and lost people their life savings. I mean, there's a lot of stuff we need to be finding out over the next 24 to 36 hours, but it doesn't look good for crypto. Now, I'll switch away for that for a little bit because Bitcoin is actually doing well. Look at this hourly chart here on Bitcoin. In fact, I'll zoom out to the 4-hourly just to show you the break of trend. Beautiful break of trend here, retesting, getting a nice bounce. I mean, we spoke about the W pattern. Let's take a look at this W pattern. Boom, boom, boom. We failed, created the higher low, and we broke. And we're looking good here. We got to get a higher high, right? I want to see us get a high above 86.9, call it 87,000. Things start to get really fun if we can get past 87,000 here on Bitcoin. Let's listen into the suits, see how the markets are looking to open up here.
Well, I know that Kelly, former Treasury Secretary Janet Yellen, making some extraordinary statements right here on Squawk Box about the status of the dollar here earlier this morning. Here's what she said.
both the dollar declined and U.S. Treasury yields rose. And what that suggests is that investors are beginning to shun dollar-based assets, and that calling into question the safety of what is the bedrock of the global financial system, namely U.S. Treasuries.
Here's the context this morning. All of this happened. Are recovering, but there's little improvement this morning in the historic sell-off in bonds last week, while the dollar also remains depressed. The question is about American exceptionalism, and it has two components to it. One is the outsized U.S. returns for more than a decade now, in which investors have essentially overweighted the U.S. and underweighted the globe. The question is that now something that is being reconsidered? And of course, the bigger, broader question, or the context for which that first point comes in.
I just want to weigh in on this, guys. I think we could see a little bit of red coming to the market. I'm going to explain why. So on Saturday, you got CNBC publishing this. This news actually came out on Friday, but they said the following. Trump exempts phones, computers, chips from new tariffs. You guys saw that news on Friday, right? And the market liked that. They're like, oh, that's most of the stuff that we buy from China. Phones, computers, chips. You're exempting from the 145% tariff. So really, it's not really a tariff. And the market's got quite excited on the back of that. Problem is, Donald Trump tweeted this, and I want you to look at the date because I don't think the market is fully understanding. This was yesterday, April the 13th on a Sunday, so maybe, CNBC and the rest of them haven't run with this. He says the following: nobody is getting off the hook for unfair trade balances and non-monetary trade barriers that other countries have used against us, especially not China, which by far treats us the worst. There was no tariff exception announced on Friday. These products are subject to the existing 20% fentanyl tariffs, and they are just moving to a different tariff bucket. The fake news knows this, but refuses to report it. We are taking a look at semiconductors and the whole electronic supply chain in the coming national security tariff investigations. What has been exposed is that we need to make products in the United States and that we will not be held hostage by other countries, especially hostile trading nations like China. We also cannot let them continue to abuse us on trade like they've done for decades. Those days are over. The golden age of America, which includes upcoming tax and regulation cuts, a substantial amount of which was just approved by the House and Senate, will mean more and better paying jobs, making products in our nation and treating other countries, in particular China, the same way they have treated us. Okay, so he's walking back on some of those exemptions, which is something we'll need to understand from a market perspective. Now, if we jump on over to the pre-market to try and get a gauge of how we're looking, Dow Jones looking like it wants to take 1% up, S&P 1.6, and the Nasdaq looks 2% up, which is interesting. But again, let's see what happens when they actually digest. The traders get to their desks after a weekend off in Monaco or whatever they do nowadays, these traders on the weekend. I know that's what they used to do when I was trading, and start to digest some of this information. Okay, so that's what we want to look at. Now, in terms of crypto, let's jump in and take a look at the liquidations here on Bitcoin. Over the last 24 hours, you are seeing 350 million liquidated, which again, reminding people that, chill out there, chill out with the leverage. There's no need to be leveraged. You're getting wrecked both sides. 240 million longs wrecked, 142 million shorts getting wrecked. There's no need for this. You don't need to be going over zealous on your leverage in such a difficult, volatile market, which is so focused news-based, right? It's moving on the news. Dear Spence, good morning. Hope you're well, buddy. So yeah, just play it safe out there with the leverage, guys. There's no need in such a volatile market. One tweet is moving the market. Fear and greed index today sitting at 31. Again, much better than the 18 we were seeing at the peak of some of these horrible days last week. But still painful, right? Still a little bit painful. Let's listen in on this.
Do you see any evidence that people are shifting away from dollars or from U.S. assets?
Well, Kelly, at this point, it's somewhat anecdotal, right? We are hearing rumblings, as Ms. Yellen pointed out, of a loss of confidence in U.S. assets. But I have pointed out that U.S. Treasury auctions last week went actually solid demand. So it's hard to say that there's a buyer's strike or there's a sell-off, a dumping of wholesale treasuries. That will take time to work out. But we are definitely seeing strange price action where the dollar is weakening when it should be strengthening. U.S. yields are falling or rising when they should be falling. So it's a strange milieu of market action. The fear, obviously, is that we are losing confidence in U.S. policymaking. And I think I would have to agree with that. You pointed out the back and forth with tariffs. Markets like certainty. They hate uncertainty. They like transparency. They don't like opaqueness. And these are things that I think will take a while to regain the trust. But yes, I feel that the dollar is in a somewhat of a cyclical, a man-made decline, given what we've seen over the last 3 months.
These are all small moves, though. I mean, I just heard historic bond move. I remember in '87 when I had a guy, I don't know whether it was long or short treasuries, but it moved 250 basis points in a session, or 300 basis points in a session. It was up. The bonds went up, the yields went down, as I recall. Do you remember, were you around then? So
absolutely.
Okay, let's come away from that. Let's look at what we got coming up this week in terms of market moving activity. Let's start off here. Today, you got a few Fed officials speaking, Fed barking, Fed Walla, Fed Harker. Fine, let's listen in to see if they kind of move the market. Fed Bostic later in the day as well. Tuesday, nothing too special. Some export price index, fine, we'll ignore that. Retail sales on Wednesday will be interesting to see if there's signs of kind of a recession. Then you get Fed Hammock speech, and then you get the big one, right? Jerome Powell on Wednesday. So we will listen in to Jerome Powell on Wednesday because, of course, we know Jerome Powell will give us a clue around will we get those rate cuts and will we, get a bailout in terms of loosening of monetary policy. Thursday, some initial jobless claims so we can get a check-in on the labor market. Again, some more Fed officials speaking through the week, which of course we have to be cognizant of because they can move the market. Other than that, not a heavy week, in terms of macro data, mainly that Jerome Powell speech on Wednesday, which could be market moving. Now I want to focus on something really interesting, which is this. Billionaire Ray Dalio is worried Trump's tariff war could spark something even worse than a recession. What could he be talking about? Let's take a look. Billionaire Ray Dalio says something worse. Right now, we're at a decision-making point and very close to a recession. The founder of Bridgewater Associates, one of the world's largest hedge funds, meet the press on Sunday, and I'm worried about something worse than a recession. If you take tariffs, if you take debt, if you take the rising power challenging existing power, if you take those factors and look at the factors, those changes in the orders, the systems are very, very disruptive. How that's handled could produce something that is much worse than a recession, or it could be handled well, he said. Dalio added that whether tariffs are implemented in a stable way or chaotic and disruptive way makes all the difference in the world. So what he's basically saying is, look, this could be the changing of world order. We know Ray Dalio is famous for this, right? He talks about, the US having its time and another new world order having its time. This could be an indicator for that, right? If you lose this tariff battle to China, is this starting point from which things get a lot worse? So interesting weigh-in from Ray Dalio.
Tariffs on Chinese imports. 10-year yield dips to 4.42. Dollar index below 100 today. Our roadmap begins with this tariff with flash. The president saying that previously announced exemptions on smartphones and other tech are temporary and that no country is getting, quote, off the hook on trade.
Speaking of which, Apple shares are up sharply on the news of at least temporary tariff exemptions. Wall Street firms are weighing in with various calls, of course, involving that stock. And we got more earnings from the financials this morning. Goldman Sachs beat expectations thanks to a strong equities trading revenue number. Of course, it's a backward-looking number. Things are very different than they were for that quarter right now. Good point.
Let's begin, though, with the markets after this historically volatile week for stocks. Jim, some discussion about puts getting exercised and maybe putting a floor on some levels?
Yes, isn't that interesting? I feel like there are people who say that the shorts are being covered. I listened to a fellow, Michael Wilson.
Who you can't believe you agree with today.
Well, I found myself shaking my head. I said, holy, could that be Wilson? I think his brain's been inhabited by other people. Positive. Buy it on the way down, saw a possible bottom, and I'm thinking, wow, isn't it incredible? It's a robot.
I think the word you used was egads?
Yeah, egads. Well, because I was watching the guy. You can program robots, David. You can get them to say what you want. It was not a Dell robot, although it might as well have been because Michael Dell's stock is moving. So what I saw today, and not to be facetious, but what I see is people saying, you know what? We've seen the downside. Maybe we can test it again. But the president has, I don't want to say blink, because that's nonsense. No. What the president did was say, okay, look, we're not going to continue to punish American companies.
I do want to listen in together on the first part of the interview. We caught the end of it at the start of this live stream. Let's see if we can listen to the first bit and see if there's anything useful here.
But if you are here for the first time, welcome to the Chain Reaction. This is Cointelegraph's daily show. My name is Gareth Jenkinson. I'm the head of multimedia here at Cointelegraph. I'm joined, of course, by my co-host, Robert Baggs. And you've probably been listening to us for the last 6 weeks. If you haven't, welcome to the show. We've got a very big guest with us here today, John Patrick Mullen. He is the co-founder and CEO of Mantra. And of course, probably not the best circumstances to be joining us. John and I were in Paris last week, actually at Paris Blockchain Week in Cointelegraph's Longitude event. And we had some great conversations last week. And a week later, I don't think either one of us would be sitting here thinking that we would be talking about a massive collapse in token price of Mantra's own token. But of course, we're going to try and get to the bottom of this and ask some hard questions and really just set the scene, because this is definitely one of the biggest stories we've seen in the last year. And there are a lot of questions left to be answered. First of all, John, welcome. Thanks so much for joining us. I'm sure it's been a crazy 24 hours. Can you tell us where you are and how you've reacted to the situation in general?
Yeah, I mean, first off, just want to say thanks for having me on to at least let us explain, our side and what's been going on. We want to say thank you to, the supporters and everyone who's reached out to check on us and whatnot. And obviously, it's really important for us to, share our side of the story and really what went down. So I'm here in Seoul, Korea right now. I arrived, midday yesterday on Sunday. I think there was a tweet that went around saying, I was on a flight. I'd already landed, and effectively, when everything went down overnight, I was sleeping. I went to bed around 12 midnight or so Korea time, and was woken up by my hotel calling me at around 5 a.m. Because of the events that transpired while I was in bed. But the team was up and saw what was going on and tried to get me awake as quickly as possible so we could put out a degree of a statement and start communicating to the market what was going on, or at least what we knew what was going on as quickly as possible. And obviously we've continued to work throughout the day to figure out more details, try to get as much of a plan of action in place as possible. And obviously appreciate the ability to come on and answer some questions and share our side of what's going on. So thanks for having me. Obviously not amazing circumstances, and let's just dive into it.
Yeah, so just to set the scene for any viewers that don't know the story, the OHM token plummeted over the past 24 hours. Obviously, during some low liquidity weekend trading, it went from a $6 billion market cap to around $485 million at its lowest. There have been a number of speculatory rumors floating around X and other social media platforms. Some people called it a straight up rug pull. Other people said it's down to some trading on centralized exchanges. Can you just tell us from your side what happened from the side of Mantra and how your team has dissected things to this point before we get into some of these allegations that have been made online?
Yeah, I mean, fundamentally, I want to categorically deny that this is any sort of rug pull or some sort of scheme. Obviously, I wouldn't be doing this if it was. I'm here to face the music and tell our side of the story. And I'll be going on a number of different other AMAs and channels to talk about what's going on. And the team is here. We're committed to being fully transparent. We're going to be putting out detailed reports of everything that went down with on-chain verification and specific details. We've been in contact with our investors. We've been in contact with all major centralized exchanges. We've been in contact even with our regulator that we work with in Dubai with VARA, and our key partners as well. So we're not running, we're not hiding, and we'll continue to communicate as much as we can. But maybe just to kind of give the rundown of what happened. So again, overnight, I was woken up and we had seen this kind of precipitous fall of the token price, as you just described. We were able to see basically that there had been major liquidations on centralized exchange, which we found out later were effectively forced liquidations of leveraged positions that utilized OM as collateral. And I think there have been people pointing towards tokens getting put on exchanges as this is selling, but in actuality, I think this was being used as collateral to support the position. We have spoken to our core group of investors as well as who we believe is the third parties that have been involved in this, and we're exploring all actions on how to remedy the situation, including legal action. But that being said, effectively what happened was there was leveraged positions utilizing OM as collateral with little notice from our understanding. Again, this is just talking to investors and hearing from their side, but little notice and warning. They were able to effectively take over positions, force liquidate them, and cause this massive cascade of selling. So what happened was basically the positions were taken over by the exchange. They then took the collateral, took the OM and started selling, which caused this cascade of sell pressure, forcing more liquidations. Obviously, it was a low liquidity environment overnight on a Sunday evening, in the middle of the night, basically, and half the team was asleep. So
this is a damning statement, right? This is basically saying the exchange killed this project. That's basically the claim here.
What caused everything.
Look, you mentioned your exchange partners. If you go onto the Mantra website, you've got Binance, Bybit, KuCoin, OKX, Kraken, Bitgate, Gate.io, Crypto.com.
Now, why would these major exchanges do that?
I take it that you've spoken to a lot of these exchanges. You're making some serious allegations about exchanges, being responsible for the drop in token price. Who have you spoken to, and how forthcoming are the exchanges with information? And how hard is it to point a finger at someone in particular? Because at the end of the day, there's thousands of OM holders that really want an answer, and we would love to give it to them.
Yeah, I mean, we have been in contact with all of our major centralized exchange partners and parties. Some have been more supportive and helpful than others. To be honest, like I mentioned, we are exploring with our investors, any and all legal ramifications that this may include. So I won't be pointing a specific finger and saying a name, but it is something that we're looking into actively, and we are willing to take a stand on this one. We feel like our investors, Mantra, our community, our token holders, were wronged here, and we will do what's right by them. We do feel fortunate that many of the exchanges have been helpful and supportive, and we have been in constant communication, sharing updates, telling what's going on, speaking to senior management where possible, and just letting them know that we're here and we're not running from this, and we'll continue to communicate as transparently as possible going forward.
Obviously, a lot of tokens were moved on chain. We found a list of some whale wallet transfers, chief among them Laser Digital, Shane Wallet, and a couple of unknown wallets, mainly moving tokens to OKX and Binance. Can you talk a little bit about your investors? I know that you probably can't name them by name. There's also been widespread allegations that Mantra holds 90% of the token supply, which in true honesty is
ridiculous
to the wider market.
Yeah. So let's take those two questions first and then second. So the first question is about specific investors. So both Laser as well as Sharuk, Shane is the partner at Sharuk, have come out and categorically denied that there was any forced selling. I just want to make sure that we put out and say that the team, the Mantra Chain Association, our key investors, our advisors, no one has sold them. We're going to categorically deny and also provide verifiable proof, on-chain proof. But this is the case. So if you look at the two sides of the tokens, there's ERC tokens and there's mainnet tokens. You can see at least on the mainnet side with the single tokens. We've actually put out a transparency report last week that shows all the various different wallets. It's all still in custody. It's all still being enforced with vesting schedules with qualified custodians. No tokens have been moved from that. On the investor side, Sharuk actually put out both Sharuk and Laser put out statements. Sharuk has verified and shared the wallets already. Laser is also in the process of doing so. But effectively, what we believe is the wallets have been mislabeled by Arkham, and I believe both parties, the investors, are in contact to make sure that these get remedied, to make sure that it's rightfully proven who's.
So you're saying it's not the advisors?
These tokens as collateral, but we want to again officially and categorically deny that any of these investors have.
So it seems like he's pointing the finger at the exchanges.
Yeah, I'm glad you say that because. Sorry, John, just to jump in there. Obviously, a lot of people were pointing fingers at Laser Digital, and me and Rob were talking beforehand, and Rob can probably jump in here, but, it's as simple as publishing a token address, and if there's a lot of people out there that have labeled these wallets and they're saying, hey, this is the wallet, it moved tokens to OKX, it's hard to refute those claims.
Well, so I think it actually is easy to refute the claims if you can prove which wallet you own, and that these tokens were sent to other wallets, right? So that's in process, and I know the investors are working on communicating with on-chain analytics firms to make sure that this gets remedied, because it is not true. So that's the first thing. Sorry, Rob, if you maybe want to hop in.
I just wanted to, just for clarification's sake, obviously these tokens have moved to exchanges. They may not be Laser Digitals, but we still saw 41 million move. And we saw, I don't know the final number, but I think it was estimated to be around $200 million worth of OHM tokens moved to exchanges in the days leading up to the crash. So just to confirm, this is absolutely nothing to do with the investors. These people that are moving the tokens aren't insiders. This isn't some conspiracy.
That's exactly correct. So effectively, those tokens were being used as collateral on an exchange. And again, the exchange decided that this was not the position they wanted to maintain anymore for whatever reason. I'm not going to say why they may have thought that or whatnot. I don't want to speculate. And they decided that it was something that they would forcibly close, and that's what they did.
Sorry, can I just ask on that?
Again put out. Oh yeah, go ahead, please. Sorry.
So my financial background is very, very limited. With these collateralized loans, are the parameters not preset? I guess what I don't understand is you use the word reckless. How can it be reckless? I think that's my question.
Yeah. So generally, what happens if you're taking a leveraged position is you post collateral, and you can post collateral in any number of assets. You can post it in stable coins. You can post it in Bitcoin, OHM in certain cases, and you have a leverage ratio or margin ratio, how much you can use as collateral against a certain asset. So investors would use different sorts of assets to put up a collateral position to maintain a leverage position. And when leverage gets unwound, you're either required to top up collateral or change types of collateral to something that's more respectable or usable on whatever venue you're taking leverage on, right? And generally, what we've seen is when this has occurred in the past, or when there's ever been times to unwind leverage, you get margin called, right? Or you get asked to unwind the position, remove leverage, add collateral, do whatever. And generally, this happens in the span of a day or more. And as long as you're continuing to communicate, as long as you continue to act, then you're able to top up and move positions. So I don't know exactly how that went down, because obviously this was with third parties that are not, as you quoted, said, insiders. These are, from what we're aware, groups of people who had ohm positions, ohm leverage positions with multiple different types of tokens as collateral, including ohm. And these got taken over by a centralized exchange and unwound. And when you unwind that, you take those positions and you sell. And that's effectively what happened is we had all this spot selling of ohm tokens that caused this drastic reduction in price. But then also the collateral value goes down too if you're using ohm as collateral. So if the price decreases, then your collateral decreases as well. And that's when liquidations happen.
Okay. John, if I can jump in there.
I guess the point is, if this happened to any other token, it would be able to absorb it. Why was the liquidity book so poor for ARM that it wasn't able to absorb that? Like, I want to know numbers. Like, what was the extent of the full selling from the exchange, whether it was Binance or OKX, he's not saying, or another exchange? What was the volume of it? And why did it have such a catastrophic effect? Because this dynamic that he's speaking about an exchange liquidating somebody's position, taking their collateral and spot selling it, happens every single day with every other asset class. So I'd like to hear more from an exchange coming out and kind of debunking this from the other side, because at the moment it's putting the blame on the exchange, although it just doesn't quite add up to me.
Yep. Sorry, if I can jump in there very quickly. I mean, obviously, everyone is looking for some sort of accountability. I guess one of the questions would be, how could you have preempted this? I mean, could you have kept better tabs on the amount of own tokens that would be being used for, like, collateralized longs and shorts? And at the end of the day, the reason that I think it's important for, you don't want to point a finger at someone, but you put a lot of pressure on the third parties if you say, hey guys, this is where all this happened. We shouldn't be held accountable. You should, because if it wasn't for your actions, the token price wouldn't have dropped off a cliff.
I mean, I agree with that. Obviously, I'm not saying that there wasn't leverage in the token or potential risk in the system, but generally speaking, this was an activity that was allowed. Right? It wasn't anything nefarious. I think generally speaking, we want to make sure that we're doing what's right for our community, and that's why we've published transparency reports about team holdings. We did that even last week before all this happened. We will continue to publish more reports. Both of our main investors published, reports publicly categorically denying any implication or involvement, and they'll continue to show more transparency as well. We will have a full post-mortem and detailed response about everything that went down as we're able to collect more information and share it publicly. But yeah, I mean, effectively our stance is, we didn't actually have anything to do with this. When you're taking leverage on a centralized exchange, you don't know what, no one can see that. And frankly, that is a reason to have a transparent, blockchain-based system for this. This wouldn't happen on a DEX.
John, OHM is obviously a massive token, particularly over the past year or so. The growth you've seen is phenomenal.
Yeah.
So I have two questions. One, how do you stop this happening in the future? And two, why aren't other tokens at risk of this happening to them, or are they?
Exactly.
I'll take the last question first. I think generally it is a risk that could happen to other tokens. And you do see it sometimes, right? You see these precipitous falls where there's leverage and whatnot, and positions get liquidated, and you see this. These massive red candles going down. I think there's something to be said about implementing even risk limits. Or
see, that's my point. You do see cascading liquidations. We talk about it all the time, right? You have a bad day in crypto, and it creates a little bit of a sell-off in your token. And if you're holding a token which is used too much for leverage, then you might have a 12% down day, a 13% down day on certain altcoins. This is a top 20 project. It's a $6 billion market cap project. What was up with the liquidity that it struggled so much with this? Was it a bad timing Sunday again? I don't know. I'm not buying it.
Or like circuit breakers of sorts going forward on exchanges, but that's a bigger, wider industry consideration we need to talk about later on. And so yeah, it really can happen to anyone. It's an unfortunate situation that's happened to our community, and again, we'll do what we can to remedy the situation. And I do want to talk a little bit about that, but maybe could you just repeat?
Exactly, dear Spence. Exactly. Down 90% immediately in an hour.
Again, let's say you get the dream recovery. How do you stop it from happening again?
Well, it's Mantra's been around for almost 5 years now, right? And we had a point in our history where we were down, over 95%. And I think at a low we were 1.7 cents in October of 2023, and everyone thought we were dead. And we went from outside the top 800 to top 20. Obviously, this has been an unprecedented situation, and the size and the scale is significantly bigger. But the team, myself, our investors are here to, face the music, so to speak. We're not going anywhere. We're here to make sure that our community gets taken care of. We're going to put together as best as possible plan of recovery. That could include buybacks. It could include token burns. It could include a number of different initiatives that we're exploring. So we're willing to do, whatever is possible to make sure that our community is supported here, and do what we can to reinstill trust in our market, reinstill trust in what we're building. Frankly speaking, the foundation hasn't changed, right? The business itself is solvent. The business has capital. It will continue to survive. We've had significant interest of institutional support looking to buy more loan tokens, loan dollars, whatever, to really be helpful of this. And it shows that fundamentally we have a very strong core, and that we have been building something of substance. As I mentioned, we are a regulated platform. We've been in contact with our regulators, and we'll continue to share information with them as transparently as possible, and we'll continue to share information with the community as much as possible. I'll be on multiple different other AMAs and channels, and trying to get our side of the story out there as much as possible. And I just want to emphasize again, I mean, we're not running from anything. This was a very unfortunate situation. It has been an incredibly tough day.
He mentions our side of the story. Who's the other side of the story? Like, who is it? Is it the exchanges? We want to hear it.
My heart does go out for the people impacted. It's not been easy. But our team, our supporters, our investors have put a lot into this, and we're not going to roll over and die. So we're here, and we're going to continue to build and continue to execute on our vision that we believe RWAs are multi-year and multi-cycle endeavor, and we do feel like we are just at the tip of the iceberg of what can be accomplished in this space.
John, I just want to take it back to Mantra's control of about 90% of the token supply. This has been heavily criticized on X. What do you have to say about that?
Yeah, I mean, I think it's baseless. We have posted a community transparency report, last week, and it shows all the different wallets. It shows effectively what people have been pointing to is this mirror bridge wallet. So again, what you need to understand is there's two sides to the Ohm tokenomics. You have the Ethereum side, and you have the mainnet side. And we launched our mainnet at the end of last year, in October. At that time, Ohm was a roughly, I think 92, 93% in circulation. I think it's almost 98% in circulation right now on the Ethereum side. Our Ethereum token is a hard cap token, right? So it has 808,808,808 Ohm, 90-ish% in circulation right now. This token has been around since August of 2020. And has been trading in the markets. That's on exchanges. I mean, the biggest holder of Ohm on exchange is Binance. You can actually go look on Etherscan, and it has all the different wallets of people who have tokens. We only have 3 smart contracts that even are distributing tokens anymore, which are all, again, verifiable in our transparency report. I think what people have pointed to is we have this mirror bucket, right? And effectively what that allows people to do is bridge their ERC token into a burn address, which I think is now like there's 100+ million tokens that have been burned, and then it spits out a token on the other side. And what we did when we launched the chain was we pre-minted the entire supply of ERCs in a bucket that's held there, that then over time drip feeds into two wallets. It drip feeds tokens into an automatic dispersal wallet and then a manual checking wallet. And effectively what that means is any tokens that are any size less than 30,000 Ohm instantly gets moved over the bridge. So you burn, and then it verifies, and then it instantly spits out whatever the same amount, 1 for 1 on that side. So under 30,000. Then there's a manual one that anything over 30,000 needs to have a multi-signature approval to make sure that this is a real transaction, and that's done for for security purposes, bridges and these type of they're basically honeypots. And we wanted to make sure that this hasn't been gamed or exploited. And I do want to say that we 100% have checked on chain, and there has not been an exploit, there hasn't been a hack of wallets. Everything again is transparently on chain, and we have a transparency report that we put out last week that shows all this, and we'll be more than happy to continue to dig into that and get more information on specifics if there's anyone who has questions. There's nothing that we need to hide from on this. It is public, it is transparent, and it's been something that we have talked about since the beginning of our tokenomic shift, which was at the beginning of 2024 when we merged these two ideas for the ERC version of Ohm and this new mainnet token or coin, which initially were going to be run as two separate things, and we're able to bring those two together back in the beginning of 2024.
John, in January, we had a very interesting conversation about, how Ohm token had been holding up against the rest of the market. And I remember quite clearly there was a chart that had all the tokens that were trading, and it was literally Bitcoin and Ohm that hadn't dropped by more than 10% in that month. And when we spoke about that, you spoke about having a bunch of investors that you trusted, that were all had a vested interest in, Mantra delivering on what it wants to do and being a viable business. Obviously, we have on-chain data. You can see a load of tokens moving to exchanges. Are you having conversations with people when you see that happening? Because, logic would kind of suggest that they're going to do something with the tokens when they're moving them to exchanges. You can't tell if they're going to sell them or use them as collateral. But when do you step in and say, guys, what are you planning to do with the tokens? Because perhaps you could have preempted this if you'd had a conversation with some of the wallets that were moving huge amounts of tokens on chain.
I mean, I don't know who the wallets were. So we had exchanges reach out and show some of these transactions. And I don't know who those wallets belong to. I know they don't belong to Sharuk. I know they don't belong to Laser. I know they don't belong to our key institutional partners, and we've obviously had active ongoing conversation with them about the recovery plan, and they will continue to put out information that publicly shares their wallets and what they can put out in the market to deny these accusations categorically and as transparently as possible. So we stand by our partners. We appreciate their support during this tough time, but we will stand by them during this tough time as well. But I can say without a doubt, they have been incredibly supportive and strong partners to us, and will continue to be so going forward. And I know it's a tough time for everyone, but right now, we know what happened. We believe the facts are on our side, and we believe we have the evidence to prove it, and we'll make sure to continue to show that to the market 110%.
John, I also remember having a very good conversation with you and Amira Sajwani, who's the CEO of DMAC. And if you're watching this broadcast and you're wondering who that is, I mean, DMAC is the biggest, one of the biggest real estate companies in Dubai. They signed a $1 billion partnership with Mantra to tokenize a variety of their asset holdings, chief among them real estate. And at the time when we had this conversation, she had expressed to me very clearly that she'd done her due diligence and that she had studied a number of different blockchain protocols when DMAC, the company, started exploring bringing some of their assets on chain. She's a very smart individual. Their family is full of very smart individuals, very well-educated people. And you said to me the same thing. You got in her office and she grilled you for an hour before.
This is one of the reasons I like the project and put a little bit in, right? It had big partnerships. It's not a meme coin.
Yeah, I mean, we have had conversations with all our main partners, and we're grateful that they understand the situation is unprecedented. Obviously, we're in constant communication with them, just like we are with our exchange partners, just like we are with our investors, market makers, regulators, etc. It's a time to not duck and hide away from the accusations. Sorry, I've been up for a very long time. But we're here to communicate with all of them, just like we are here to communicate with you that we did nothing wrong. We're here to show that, and we will continue to prove that we are a team of high integrity. We're a company that's been here for years, has been building through ups and downs, and will continue to build. And the fundamentals and the foundation that we built over the years with these partnerships, with this licensing, with these key institutional backers, is significant. It's real, and it's not over just because of the situation. It's obviously a very tough time. We don't take this lightly at all, but we will continue to move forward, and we're grateful for the support of all these people and all these supporters who've reached out, checking on us, checking on the team, making sure everyone's okay. We are okay, and we're going to continue to rebuild and continue to put together a plan to make sure that our community can rebuild as well. That's the most important right now. But we are supportive, and we're grateful for the support of people like Amira. I've spoken to her this morning, and we'll continue to communicate with them on the developments of the situation as we know. But they're aware of what's going on. But I have talked to the family, and they understand the situation and have our back and support.
I think community sentiment is obviously a big part, and we talk a lot about price because that's the story here. Really, is the drop in price. But although price isn't everything,
right, let's leave that there, guys. I mean, look, not a great look, to be honest. Even this interview isn't the most kind of assertive / convincing. I'm not really sure what's going on here. I mean, look, he's pointing the finger at the exchanges. Even if he does point the finger to his exchanges, I think the exchange, like I shared with you there on screen, that Binance did change some of their risk metrics. But that's very normal. I don't see that being, the reason for this to collapse. If that was the case, then there's two scenarios there. Either one, you're claiming that a certain exchange, whether it's Binance, whether whoever it is targeting you specifically. Right? Are they targeting you specifically? In which case, that's a crazy thing to say, right? Why would an exchange who makes their money from projects listing, right, and just is a middleman want to kill your project? Or two, they done something in the norm of what they do for other projects, but your project led to that collapse. There was something underlying wrong with your project, or something going on, whether it was manipulation, whether it was a weak liquidity book, whatever it was, that you couldn't handle those cascading liquidations where a top 20 project at $6 billion valuation should have been able to. That's my view on it. So if we're led to believe that the founders didn't sell, no strategic advisors sell, and it was the exchange that created cascading liquidations, then that's my take on it. Cool. Dispen says he's not convinced last week. Why did they conveniently release those addresses last week? Exactly. Lots of smoke going around. We're going to have to find out more. Again, I didn't like how Patrick Mullin, I think he looks like he's out of his depth here at the moment. I mean, how he's coming out, how he's giving these interviews with these journalists. Not a great look. Should have just done a Twitter space or a live and addressed it head on, right? That's the way I would have handled it. Head on. Answer the questions if you've got nothing to hide. Show their wallet, show the addresses, show your lot contracts. Let us see it all. Give everybody some confidence. That's probably how you should have handled it. But this is a nasty chart to look at, right? This is exactly what's wrong with crypto. And until this kind of stuff is resolved, we're not going to get the $1 million Bitcoin. We're not going to get, a lot of blue chip good crypto projects. Because for every, one of those projects that are trying their best to be a real stable project, they have to put up with projects like this, which just make the whole space look bad. Right? So I do look forward to us getting to the bottom of this. We need full transparency. If it's the exchanges, let's see it. If it was the project, let's find out. If it's the advisors, let's find out. The crypto space deserves to know the truth. And I'm sure the truth will eventually come out, just like it did with the Terra Luna and Do Kwon situation. So we are 2 minutes away from the US Open. Let's see how crypto does in the lead up. So just now sitting at exactly $85,000 here. Markets feeling quite positive. But again, that's happened quite a few times where markets have been pretty good in the Asia and European Open. And then the US kind of messes things up when they open up. So currently the US market is feeling positive on this whole, US tariff exemptions on semiconductors and stuff like that. But like I shared with you, Trump is saying, no, there's no exceptions. And I just want to see, how does this play out today? Are there exceptions? Are there not? How does the market want to price that in? And what are the markets concerned going into this week? I think it could overall, avoiding any of this more tariff escalation stuff, outside of that, I think it could be a good week because we don't have a crazy macroeconomic week in terms of data. We went through the calendar earlier on the stream. We've pretty much just got Wednesday Jerome Powell speaking, which will be important. Outside of that, we have a fairly clear week to run into, right? So Let's see how US markets open up. Let's pull up the S&P on the 5-minute chart. Green in the pre-market. NASDAQ nice and, well, red candle the 5-minute, but nice and up here going into the open. Let's see how we open up. I'm going to ignore the news. They're just talking about Blue Origin, so I won't switch to that. CNBC is on a break, so I won't switch you to there. What else have we got to cover off? Oh yeah, altcoins. Look at this, guys. Apart from this the market is actually okay. Like if we just come down here, the list here, Bitcoin's up 1.4% before the US Open. Ethereum is up 4%. Sonic is up 5%. Let's keep going. Pepe is up 4.5%. Solana is up 4%. Cardano is up 2%. Bonk is even up 5%. Chainlink is up 4%. Avalanche up 4%. Algorand up 6%. You know, it's a decently green market with even the Bitcoin dominance taking just a little bit of a cooling off here today, which is interesting to see, right? A bit of a red day on the dollar index.
Beat helped by a jump in equity revenue. CEO David Solomon expressing some optimism despite comparing the second quarter with a markedly different operating environment than earlier this year. Jim, we got third best revenue, a little buyback approved.
Right. Well, we need the buyback. My Chappell owns it. Now, they did buy back 7 million shares, 610.
Let's switch off that. They're just going to go into the open and they'll start clapping and cheering into the open. Outside of that, in the crypto space, let's take a look at total market cap as well. On the weekly chart, it's been okay last week, right? 6.4% came back into crypto, which is really good. So basically, some of that money that dumped out of crypto due to fears of the tariffs, you saw it came back quite quickly. So $160 billion came back into crypto last week. Can we climb on that? Can we see some more coming this week? If we look at the weekly candle for Bitcoin, incidentally, it was really important, wasn't it? We spoke about it from Monday last week when we started dumping because of the Trump stuff. We have to finish this candle green. Not only did we finish it green and avoid losing the weekly candle close below it, we also got a bullish engulfing candle where the candle is bigger than the previous candle. See this candle body? We go over this in my TA course, by the way, ijazcrypto.com/TA if you're interested. It's bigger than this one, which is a good sign for a reversal. It shows good bullish momentum. And then you see another candle opening up this week green as well. If we can finish this week green, really, really good news. Fight this battle here, and we can start filling the gap back towards 94 and even 96, because that's initially where we fell from. Like once we clear this candle here, those candle bodies here, which is 86.2, a nice free ride up to 96. I think it can be quite easy to fill that once we're feeling a little bit more positive, okay? So that's something I'm watching out for here on Bitcoin. Cool, guys. Loads more to get into. As the market opens up, I will join you guys for a market closing live stream. Dear Spence says the Sonic chart looks strong. It does. Let's take a quick look at the Sonic chart then before leaving you guys. 4%. Strong weekly candle last week, which is good along with the rest of the market. But again, needs to clear some important levels, right? The battle here, just like I shared with you, the battle on Bitcoin, the battle on Sonic is around that 60 cents. Until we get back above 60 cents, we're not going to be flying up to some of these higher numbers. That's the battle here, is this resistance, which was here, resistance at 60 again, and then here was resistance 60 again. So we need to climb back, fight this level, and then we can be onwards on Sonic. But again, Sonic's just moving on the rest of the wider market, right? Bitcoin's moving on the traditional market, and then the altcoins are moving on Bitcoin. So we just need the wider market to feel positive, and then we'll have permission to run. Cool, guys. I'll see you in the stream later on today. Thanks for joining me. Smash some likes. Don't forget to subscribe, and I'll see you in the next one.